Okay, this is silver priced in US dollars daily scale. I remain bearish on silver. Even though silver has not delivered that crack under the support that you see here, I remain bearish on silver. I remain bearish on gold. I think this crack is likely to come potentially this week. A critical level that you must watch very carefully is the black line right here. And the first alert, if you are following this market very closely, should definitely be this level, which comes at 1736 or so. Okay, so if silver does manage to climb above this level, that's an alert. An alert, maybe a big rally is starting. Pay attention. It climbs above the black line, it sits on top here. The bears should worry. Yeah, the bears should worry. This could be coming. Okay, it could actually come very quickly if it turned that way. It means that the entire energy that was stored here, what you see here for so many months, will suddenly burst into the open here, and we will have a sharp run. So this is really important that you pay attention. At this level, 17.7, okay, it's right about here, but as I told you, my expectation is that in fact it will break the support, it'll go under 15.5 and will go and test 14.5 and ideally take the stops here, but will not break the bottom that we registered in late 2015. That will be an ideal set for Sears trap. Do you see? The bears will go wholeheartedly with that, thinking that they're going to have a complete meltdown, but it's quite possible. I'm going to leave that to Mr. Market, obviously, but I'm going to tell you that this option will still remain in my mind until it breaks until and if it breaks this low. Okay, so I'm staying with this scenario that it'll come down, take the stops, reverse, and boom, fly. Okay, so that is my working assumption at this point, but as you can see, short term I'm bearish. Here's the 60 minutes with the various arrows that I added during the week. I'm going to clean that a bit so that you can see what's going on. Effectively, it appears that silver has delivered the first leg down on the 60 minutes. Right here, that's my 1, 2, 3, 4, 5. Silver may have terminated the 5 legs right here or here. It's not going to make a huge difference. If it ended here, that's probably going to call for a slight bounce here, probably towards 1675 area or so. Okay, if it ended here, then that's your A, that's your B. Okay, A, B, you're with me, and perhaps just a very small bounce here towards 16.6, if at all. Yeah, it might even just open and go down straight away. But the point is that that is to be taken as the first leg of the bearish move that I expect on the downside. This is my best reading for silver currently. I do not expect silver to go back to 1685, sit on top and start building a base. That'll be out of character. Out of character, landing, you know, sitting on top of support here at 1690, 1685, building a base. What it's doing here? It's got nothing to do here like that. Yeah, this will be out of character with a bearish performance that I expect like that going down. Such a thing would mean it wants to go there. So if you like, you can even monitor such short-term behavior. Yes, price action, that's the 60 minutes. Anything like that would be already suspect. Well, you know, it's out of context as I just explained. Okay, this is gold on the weekly scale. Well, the week came and passed and boom, continue down, and I don't think it's over. Now, even if I take the least bearish scenario, yes, which must really take place in our considerations here, I take the least bearish. The least bearish would be that this is an A, that's a B, that's a C coming down. Well, if you look, we had 2 weeks going down. How many weeks we had going down on the A? Oh, definitely more than 2. We had, let's say, half a week here. So let's say 1, 2, 3, 4, 5. I would say 5.5, 6 weeks going down. So I think it is extremely unlikely that even in the least bearish case, that this move is over. You are with me? You compare 2 weeks to almost 6 weeks, doesn't make sense. And we are not even talking about the price, the extent of the fall, which is completely incomparable to the extent of the fall here of the A. And it is still within the descending channel. It broke some serious support levels here. It appears to be very likely that it will continue down. And that is my working assumption. I think this is probably just showing us the first leg, yes, of a full-scale C or a third wave that will take gold down to 1240 and potentially lower. Yes, definitely down to 1240. That is very realistic. That's the 200 moving average. Do you see that marked by this line here? And potentially a lot lower. Okay, so let's have a look now at the daily scale, and you can see the entire set of waves that composed the one or the A. There is no comparison. You see, this really looks like just one leg of this big slide here. It looks like this is comparable almost to the fifth leg. So you see, we do have quite a bit of time to go on the downside here before we can start talking about a big reversal. That is established as 1-2 AB, and that is taken as the first leg. That is the best reading that I have for it. Although when you look at my chart here, you see no labelings. What's going on here? Why the labelings are missing? Well, because I simply see too many options and I don't want to overload it. It's very simple. If this is showing the end of the first leg, okay, so the correction started from this spot, and I would imagine we are probably going to see something like that. That's going to play out as an ABC. Okay, ABC, there is a triangle forming here, so that would support a bounce, short-term bounce in gold, possibly to 1275, even 1280. Okay, all within the context of corrective price action to the first decline. We can sit and debate for hours how to subdivide this, and there is no, there is no perfect right solution. The perfect right solution, if you like, will be revealed once the correction is over and it's going to slide, and the manner in which it's going to slide. You see, then you will know most likely where the impulse wave that started here ended here, ended here, ended here. You see, right now there is no point pulling hairs and sitting and debating for hours and hours. Something is going on. It appears to me that it's corrective, and it's corrective to the first impulse wave that we have noticed here. Now, if I'm right, it will show further consolidation potentially around here, and then give us that pop. That will account for the ABC correcting all of that. If it opens the week and it just slides, boom, then there is possibly prospect for this being 1, 2, that's 3, that's 4. Yeah, that will turn into a tiny fourth wave like that, and it will slide in the fifth leg. I don't favor this particular wave count, yes, the 1, 2, 3, 4, because I don't see that silver has anything similar, and often they move very much together, so that that is not my preferred reading. But either way, even if we bounce here, we see gold running back towards 1282 or so. I think it doesn't really have a long lease of life. No, I would imagine it's going to find quite a bit of resistance. Certainly if it manages to get to 1292, I just don't see it climbing above that. If it does, then I missed something. And of course we have to come back and review the situation. But otherwise, I think that the levels that I mentioned here should be enough to push it down. You have definitely news the moment it breaks through the floor here in an impulsive wave. Okay, you have news, you have to review, you have to see what's going on. Do we have in fact the following combination that I have not mentioned yet, that this is one, that's an A, that's a B, that's going to be a C, like that. Yeah, that's 1, 2, down. It goes like that. ABC. Do you see? There are lots and lots of options here, but the point is that we are working with a certain wave count that has certain weight. We have seen the weekly, we have seen the daily. Okay, we examined the 60 minutes, we can go down to the 5 minutes, but the point is the trend is down. And back to the daily, the trend is down. The market is sliding inside pretty well defined channel. Okay, pretty well defined channel. Some very serious support level here was cracked. It attempted to come back, failed, cracked again, and now it's just hanging around here. That's not the end of the story. There is no proportional move to what preceded. Do you see? There is no proportional move here. So the argument, in my opinion, is pretty strong that gold has more to deliver here on the downside before we can start talking about a serious recovery.